The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and exciting and nice and warm weekend. I know we had some decent weather here in Chicago for a change. It got up to almost 75, I think, at one point during the week. It was nuts. So it was nice, a nice contrast to what we were talking about in some of our last shows, where it was getting back down into the low 30s for a while there, and trying to remind us that winter's icy grasp has not yet finished with us. My name is Mark Longo, and I am your host for this meandering stroll through the world of options. That's certainly an appropriate title for today's activity. And I am joined by the usual cast of characters, sans one today. We are short a man from the mountains, but we will make up for it with gusto. Of course, Uncle Mike will join us by remote a little later, so listeners who are worried about no Uncle Mike today, they will get a little bit of a taste of him later on in the show. And so I am joined in the rotating Options Express seat by none other than Big Rob Kurzakowski himself. Mr. Kurzakowski, how are you doing? How was your weekend?
Oh, well, we had such an exciting trading day today. I'm just trying to stay awake over here. I think with Bernanke talking tonight, we just had an extremely quiet day, so just struggling to get through today.
Yeah, I think Bernanke did put a damper on the markets today. And then, of course, as always, the greasy meatball himself, also known as the manager of the Midi Metals, and the lover of the Slinky. He holds many shares of Slinky stock. He is, of course, the greasy meatball himself, Mark Sebastian from...
How did you know about my big long position in Whammo?
It wasn't hard to tell. All that little subtle Slinky shaking you've been doing has been nothing but a pump and dump for
I'm subtly getting people to buy Whammo boomerangs, Whammo slip and slide, Whammo Slinky, Whammo super bouncy ball.
Don't forget the hula hoops and all that good stuff.
Oh, yeah, you name it. I am a big supporter of the Whammo line, you know?
If you're not bullish on Whammo, you're just not bullish on life.
Well, yeah, you know how some women only wear Versace or Armani? I only play with Whammo.
I think you have some future product endorsements coming your way.
There you go.
I could just see you in, a one-page pullout from Highlights magazine.
You like
I only play Whammo.
Toys?
Do you like toys from 30 years ago? So do I. Mark Sebastian, OptionPit.com. All right. And with that out of the way, with our fun banter concluded, we shall roll right into the trading block.
The fun banter never really ends.
That's true. The whole show really is fun banter.
The trading block.
Welcome to the trading block. This is the section of the show where we discuss what's catching our eye from today's broad market activity. And as we mentioned in the banter block, there wasn't too much to catch our eye. We need an intro for the intro session, an intro for the banter block, if you will.
Yeah.
Yeah, not too much lighting up the old macro tape today. The S&P was barely budged, not even up a point. Dow up 23 handles, NASDAQ down barely a point, and the VIX cash pretty much unchanged as well. So not exactly a bunch lighting up the tape, mostly a snooze fest. Like Rob said, I think a lot of the big traders are keeping their powder dry ahead of Bernanke running off at the mouth tonight. You know, whenever he talks after the market is closed, it's a dangerous thing. You don't want to have a lot of positions on in case he tends to spark some sort of frenzy in one direction or the other. So I think a lot of people were just taking it easy today and not putting on much in the way of overnight risk. And Rob, were you watching anything particularly interesting in the commodity sectors today?
Well, actually, we just kind of had a mixed day in oil. We started off with a really good start, kind of an extension of the breakout that we saw last week on Thursday and then into Friday. And then, traders kind of got, I don't know, maybe some second thoughts, or maybe they're expecting the oil to come back down to that 105.75 level and at least test it. So we saw some profit taking, and it's interesting to note that, I mean, gold and silver didn't do a whole lot today either, and what we see in the longer term traders kind of been supporting the gold market, but they have a lot of mutual traders in the very near term, or kind of the short term directional traders. You rarely see gold and crude oil move explosively higher at the same time to the same degree. So gold has kind of been lingering around. Silver has been very hot lately. Even that had a relatively quiet day. And as far as other commodities, we saw copper come back down, and it's now testing a pretty important support level at 425. That's a level where, if we break that, we can test $4, and if we can't hold $4 in silver, that could be that can get ugly in a hurry. Previously, the last three times that copper traded above $4, it failed miserably afterwards. When we broke through last year was a huge was a huge breakout technically, because we didn't have we finally broke through and sustained rallies through the $4 level. So I think that even that market, even though it's tightly or has pretty tight supplies, we're seeing just the weight of the Japanese economy kind of just at a standstill, along with China easing some of the demand. We're seeing a lot of the bulls leave that market in a hurry, and that may eventually drag silver down, because silver just doesn't seem to get derailed by anything lately. And the rest of the
silver, ever since it hit 26, it just bounced and it's never looked back, pretty much.
No, I mean, if you want to look at a definition of a parabolic chart, you can just look at a silver chart right now. So it's surprising. It seems that nothing can. You figured with the tsunami and some of the worries that maybe electronic production isn't going to be quite where it should be, all things being equal, after the natural disasters. You figure that would throw the brick wall up in front of the silver market, and it hasn't. So I think some of the base metals finally coming down, and gold not doing a whole lot, may finally weigh on those silver bulls. But other than that, we had just a really mixed day. The grains did pop a little bit early, but they had a very erratic session. After last week's USDA report, I think we still had some people that were just trying to pile into the market, and then they got kind of whipsawed earlier today, or overnight, and early in the morning. And other than that, it's just it kind of followed the equity markets, just a real snooze fest.
Yeah, I think a lot of people, myself included, expected the compounding disasters over in Japan to really put the brakes on the metals love and the metals bulls for a while. And like I said, we haven't really seen that, except perhaps to a small degree in copper. But yeah, GLD and SLV have continued their inexorable march northward, and nothing seems to be able to slow them down these days. Mr. Sebastian, on the equities tip, what were you particularly watching today, and how goes your battle with the CBOP?
Well, I'm waiting to see where skew is, but downside's still pretty flat. Vol's pretty low. I mean, there's really just not a lot that I'm seeing happening. This was kind of a kind of holding pattern market today. I mean, there was literally nothing going on. I mean, the only kind of interesting story at all was the Southwest story, where we saw vols really kind of pop in Southwest. But even that, once we got that nice vol pop in Southwest, everybody just sold right into it. So, that was about all I really saw. VIX options, it said we're up a tenth of a cent, but coming out of a weekend, we're probably really down today. VIX futures were flat. VXX down a touch. Just a whole lot of nothing. It was just, this is one of those days where I would have just said, why did I even bother if I was still on the floor? Because just no volume, no trading, no churning, no activity, just nothing.
This is one of the days when you would have head out probably around 11:30 and had one of those nice mixed beverages over at Ceres and probably spent the rest of the day there.
If the Cubs were playing, definitely, but as they're not playing today, probably not. So, but yeah, no, I probably would have. You're right.
You were in Ceres every day regardless. I don't know what you're talking about.
There was a group of guys that did that literally every day. They would come in, trade in the morning. Yeah,
they were called alcoholics.
You guys with the purple wine-stained teeth.
Yeah, exactly. Yeah. Exactly. And for listeners who don't know, Ceres is famous for its extremely powerful. At least it used to be famous for its extremely powerful mixed drinks.
It still is. Don't worry. Well, I remember the best thing is their famous rum and Coke. I
used to go for the vodka tonic, but it was the same thing. You get a glass of vodka and then a can of tonic.
Yeah,
and you had to make room. You had to make room in the vodka to add the tonic.
They would literally give you a glass of rum and a can of Coke. So, I mean, it was insane.
It wasn't the most conducive thing to quality trading in the second part of the session.
Yes.
You mentioned the Southwest stuff. Of course, that has to happen 2 days or so before I'm flying out on them later this week. So hopefully all their creaky jets with their holes in the top of them are being fixed as we speak. And in terms of vol, not surprising that people are seeing this as a one-off event and they're coming in to take the opportunity on a day like today to find some places where you can actually hit some vol. Mm-hmm. Southwest closed on the day down 1.7%, so it wasn't as bad as some people had or thinking it might have been going into today after all these dire news about the roofs ripping off of the top of these planes. And, of course, we mentioned the old skew index friend, your old friend, the CBOP. And
the CBOP.
They haven't released today's numbers yet. I just pulled it up, but, which is another annoying thing with this. They have to wait for the time series to be updated. Talk about an archaic distribution methodology. But
I know.
If you look at it, looks like it's been, according to their methodology anyway, it has been creeping up quite a bit. Friday saw nice downside.
My CBOP adjusts for some of this stuff. The CBOP adjusts for that. Right now, I've got the CBOP at like 20.5. It closed at about 20.5 on Friday, which is crazy low. Getting into the 19s means you got to buy historically the CBOP, if it gets into the 19s, is a buy. So
historically, all of 2 weeks that the CBOP's been around.
Yes. Well, no, I wouldn't get all
historically this index.
The back data for the CBOP.
I gotcha. So. And that's probably going to do it for our trading block this segment. And with that, we're going to roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the section of the show where we discuss the interesting and or unusual options activity that's been going on today and lighting up the tape and You can call the odd block today probably the drug and takeover block, because a lot of that type of activity filtering its way into the block today. Going to start things off with one of our favorite types of trades, the old pop off of a biotech based on some sort of approval trade. And it's going to be in Vivus Inc. VVUS is the ticker symbol. They closed at $6.73, up 42 cents, or about 7%. This is the name that does about 4,000 contracts a day, and they did about 26,000 today. And this, as you probably have guessed, is a biopharmaceutical company, and they had some clinical data that showed off that one of their drugs was actually able to reduce blood pressure and cholesterol. So I guess the double whammy of drug results there. If you can hit both of those in one, I think you got pretty much a home run drug right there.
Yep.
So as expected, the options bulls were off to the races in Vivus. We saw, starting off with a big buy of 2,400 of the May 8 calls. These went up for about 24 cents. He's a little bit out of the money, so they're a little bit bullish. Towards the end of the day, it actually was a net volume of 8,000 on that strike. That includes some other trades we saw going up. We also saw a second trade going up on that May 8 strike, which also involved the May 7 puts. We saw 3,000 lot of the May 8-7 risk reversal going up, with the trader buying the 8 calls and selling the 7 puts. And that one went up about 3,000 times as well. So total, even beyond that, we still saw another couple thousand of the May 8s going up beyond those two trades. So a lot of upside specs going on right now, that this trend and the upside in Vivus is going on beyond front month expiration, is going to roll out into May. So yeah, a lot of people looking for upside. There's some conferences coming up for this name that could also be contributing to why people are rolling out their upside into May. And there's earnings on May 2nd as well, so you probably have some traders wanting to get that earnings pop as well with those calls. But
this company has just so many different drugs out there. They got a diet drug, just a bunch of different things in the pipeline. I guess they're figuring biotech up enough different things, and eventually something will stick. But this stock is a high flyer, and I could definitely understand why you wouldn't want to just outright buy the stock. The way this thing flies around. It's got some interesting plays on, some of the calendar spreads are kind of interesting. Because back month vol is actually a lot higher than front month because of those different earnings. So there's some things you can do to take advantage of some of those things if you're willing to kind of, if you're looking for early price movement. But that is a mover and a shaker if I've ever heard of one.
Yeah, this is definitely one we're going to put on our keep an eye on segment, so we can keep an eye on, come back to them to see if they have any pop. They'll join the likes of THC and a few of the other ones we have in there. We're watching for our listeners. Looks like go ahead.
Did you see Xenoport?
I did not see that one. Which one? What did that one?
It's Xenoport. It is
the XENO?
XNPT. They got a FDA announcement apparently coming out on the 6th, which is what, tomorrow?
That would be 2 days. 2 days from now.
Tuesday? Yeah. The front month vol is 360%. So.
Oh, one of those.
Yeah. So, it's an interesting little play, because you could do something like it's got some cheap plays. You can do like the 8 May 6 call spread for a nickel, or the, some of those, the 7 call spread for, it's got some interesting little plays. So that was one that's along those lines. If you want to see what Vivus is going to do ahead of if you're a Vivus, which is a bigger player, if you're a Vivus watcher, watch how Xenoport moves over the next couple of days. And I think it'll give you a really good lesson in how Vivus may move into their announcements. Similar price stocks, similar price vols.
Yeah, this one did some volume today. This one did about looks like about 11,000 contracts on an ADV of about 2,000. So
yeah,
it was moving. I'm looking at the strikes here. It was solid all across the board, all the way up from the April 5 puts out to the April 10 and 11 strike was active, and you saw some stuff rolling out to some 500 lots going on out in May and beyond. Yep. So yeah, this was a surprisingly diverse set of activity in a little name like this, which was closed at $6.48 up 7%, up 43 cents on the day. So another interesting one to throw in our we'll just keep expanding this file pretty soon. Maybe we'll have some shows every now and then we just go back and review some of these interesting names that we've talked about.
Yeah, that's a good idea.
And speaking of review, the next one we're doing is actually Iron Mountain, which we've talked about on the show before. And if you remember, Iron Mountain is this data storage and also shredding and a variety of other corporate data offerings that they provide. And we saw this name closed at $32.44, up nearly $1, or about 3%. And this is a name that has an ADV of about 6,000 contracts. It did about 14,500 today. And the bulk of that was bullish activity, so people are liking Iron Mountain right now. We saw a good chunk of that was in the July 35-40 call spread, which is an upside call spread. We saw a 1,500 lot and a 1,300 lot of this spread going up, both of them with a print of a little over $1. And this got a little bit of a long delta, as you might expect from the spread. We also saw a sizable call-to-put ratio. The bulk of this was well over 10,000 calls versus only a few hundred puts. So bulls on the day today. And the stock's up quite a bit. It's got a hedge fund. Has been some M&A activity on this name in the past few months. The hedge fund came in and nominated some people from outside the company to be on the board, and that's, of course, caused some pushback from the company. Adopted a poison pill. And there's been a lot of pushback going back and forth. Since then, this trader obviously thinks that these problems are going to be resolved and the stock will be moving to the upside by July. This is in contrast to what we saw about a little over a month ago on the show back, episode 36, back in February, when we saw a lot of bears piling into IRM, and that might have been as a result of what that hedge fund was trying to do. But a lot of bearish activity a few months ago, and now we're seeing the reverse of that. Some people are rolling up into upside vertical call spreads in July in IRM, probably thinking that the worst is behind this name and that this poison pill and all those other problems will be resolved soon. The stock's going to pop in the next few months going into summer. You guys watch this name at all?
Well, no, I'm looking at this. It looks like the guy, what I like about this trade is, it's a really cheap way to subsidize a cheap call bet, I don't think this guy has any inklings of this thing going to 40. But he thinks it could make 35, 36, 37 by then. And by using the spread instead of the outright, he's in much better shape.
Yeah, exactly. This is just a good way, pick up some upside and then finance it with some even greater upside, and a nice good way to reduce your premium exposure and take a nice flyer on the upside without breaking the bank. I think Tusaw, if he was here, would love this trade quite a bit.
Yes, he would. He'd go, "We don't invest in Iron Mountain, but I like the trade." Something like that.
And then he'd laugh very deeply and menacingly. As he is wont.
And he'd place the emphasis on spread. He'd go, "Call spread."
Exactly.
A bull call spread. So
as a wink and a nod to the fact that this actually is him putting on this 5,000 a lot or whatever.
That's exactly right. You can always tell when Tusaw owns the position because he goes, "Call spread." So. And
we're going to finish things out with more takeover speculation, more M&A activity in AK Steel Holding Corp. This name, ticker symbol AKS, it closed at about $16, up nearly a dime on the day. This is the name that does about 15,000 contracts a day. Lately, they did nearly 28,000 today. And the stock was up basically a lot more in the morning, and then it kind of settled off a little bit towards the end of the day. But a lot of this upside is coming from renewed takeover chatter on this name. I guess someone's poised to come in and make a bid for AKS. And so, not surprisingly, we saw bulls pouring in to AKS. We saw just before noon a bunch of upside calls going up. Actually, at the money calls now here. We saw 2,400 of the April 16s going up for about 55 cents. Total on that strike of about nearly 5,000. And then we saw the April 17s where the bulk of the activity was. Nearly 9,000 of those went up on the day. The bulk of them going up for about being buys, lifting offers for around 20 cents. So a lot of sizable upside bullish activity on this name. These are primarily April contracts. These are not going to include any earnings bump. The earnings is expected right after April expiration. These guys are not positioning for earnings. They're positioning for something in the very near term as an M&A event. We also saw some people rolling out a little bit farther. We saw about 5,000 of the May 18s going up. with not much open interest ahead of that, only about 2,000 contracts open interest. So a lot of opening paper for some people looking to take a little bit of a longer view and also roll some earnings premium into their trade. But yeah, the bulk of this activity was concentrated in front month, which makes me think that people are expecting some takeover news imminently in this name going on in AKS.
Yeah, this is one we actually see a lot of trading volume, and surprisingly, it's a relatively cheap steel play. With USX and some of these other steel companies trading a lot higher. As far as our actual stock order flow, on the option side, we actually see a lot of covered put selling. People they're selling short the stock and then selling a put against it because it actually does have a pretty decent amount of premium on the put side. So it's certainly a versatile play. This is definitely. People are expecting this to move. It's unusual to see that much call premium on the 18 calls only a month out, trading at something that's that far out of the money with that much premium on a steel company. Somebody's definitely expecting something to happen here.
Yeah, no one was doing covered puts today. The call put was about 26,000 calls versus about 1,500 puts.
No, this is a great buyout for why wouldn't China come in and buy them? Some Chinese company come in and buy them. I mean, it would be a perfect fit, right? So
I think the nation of China should come and buy them. That's what I think.
The nation of China?
Your original pick. Why wouldn't China just come buy them?
Yeah, why wouldn't China
nationalize AK Steel Holding Corp?
Yeah, no. I mean, we've seen a lot of that. I mean, I think we're seeing a lot of another interesting kind of small name that has seen some weird upside paper is NBR, Neighbor Industries. There's a lot of these kind of lower to mid-level industrial, drilling, steel, copper, where there's a lot of speculation that some bigger players are going to come in and try and scoop them up.
Listeners will remember we talked about Neighbors last week on the show. They had a lot of interesting activity going on out there. They closed today. Relatively, looks like a modest day for Neighbors today. Relatively average volume, not much going on in the name. So, yeah, but that's another one we talked about last week. They had some similar activity going on out there.
Yeah, and at $1.8 billion market cap, that's chump change for some of these larger companies like the Freeport, McMorans, and the BHPs of the world that are the USXs. I mean, those are just giant companies. So, under $2 billion market cap is really cheap in an industry that's already consolidating to begin with. So you have to. It seems like with steel and some of the metals, it's the only way to survive is to consolidate and keep on looking for fresh merger opportunities or buyout targets.
Yeah, I wouldn't be surprised to see this name popping up on your desk a little bit over the next few weeks, Rob, as maybe some of your customers will be piling into these calls as well ahead of whatever announcement people are expecting in this name coming relatively soon. And that's going to close it out for today's Odd Block, and we'll roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the section of the show where Mark and I sit back and crack open a nice cold beverage, and we let Rob.
Great idea.
We let Rob loose and give him the reins of the show, and hopefully we get it back in one piece. So, Rob, the show is yours.
Crazy at it again.
Crazy K. Go for it, sir.
Well, today we actually saw a lot of activity in Southwest, but it seemed like it was all on the bullish side. We really didn't see the frantic put buying that sometimes a company sees when there's negative news out there. We saw some premium selling, some put selling in April and a little bit in May. and some call buying, longer dated. A lot of people going into the stock itself. So it certainly, a lot of people just view what happened with Southwest as kind of a hiccup, because relative to the rest of the industry, the company has a really good foundation. They overall, I actually did a little bit more research there. Their planes are a lot newer than a lot of their competitors. So I think you could rest a little bit easier knowing that it's just
I feel better. I feel better taking my kid on a Southwest plane on Thursday now after hearing that.
So that's kind of the bulk of the activity that we saw in a particular security. Just been kind of a slow grind. We've seen a lot of kind of just put credit spread selling of late. Maybe people buying stocks for the longer term. What we really haven't seen a whole lot of recently is covered call selling. I think that some of the call premiums have gotten a little bit cheap, and I think that's, some people are just saying that it's really not worth the potentially having a stock that they got relatively cheap, getting called away on them, or having to be rolled later on, or rolling your short calls later on to get the premium. So I think that some traders are still kind of holding out for maybe a little pop in volatility and maybe some fatter call premiums. What's really surprising has been the absence of, just 3 or 4 weeks ago, every other phone call was Amazon, Apple, Priceline, Netflix, Google, some of these kind of high-flying tech companies, and the NASDAQ stocks have been, the NASDAQ's been the kind of the quietest mover, and has been just kind of a slow grind for the index the last few weeks. I think that some of these prices got a little bit out of hand, and yet people are afraid to short the market as well. So a lot of indecision leading to some traders, moving into more traditional industries. We've actually seen a lot more trading activity in the FCXs and those types of companies. Certainly a lot of a big uptick in oil companies of late. The OIH has gotten some love recently, and that was kind of an index where, or an ETF that hasn't really seen a lot of play. I think that a lot of people were actually directly investing in stocks, and I think that now we've seen some deviation between the Exxons and the BPs, and I think that as far as the percentage moves intraday, so I think traders are just kind of trying to ride that oil wave higher by capturing a broader basket of stocks by going into the OIH. But other than that, it's like I said before, I think last show, it's kind of been bring a dartboard with a bunch of stock symbols, and bring a dartboard with a bunch of strategies, and that's pretty much what people are trading. Is very, very mixed trading. This is probably the most diverse trading we've seen recently. But the intraday volatility hasn't been as high. Some of these choppy days are day traders' dream, and there just hasn't been a whole lot of movement. Certainly on the futures side, we've seen a little bit of reluctance. I think that we're seeing traders move into some of these more volatile commodities, naturally volatile commodities, the copper and the oil. The indices haven't seen quite as much activity as we were seeing just 2 or 3 weeks ago. So overall, it's just it seems like a lot of indecision. I think that anytime the Fed chairman speaks, I think this is only the second time that Bernanke's done any type of interview. I think the last time was 60 Minutes. He did that just after the big meltdown in 2008. And then the QE1. I think that all those factors compounded. Traders are just content sitting back and not getting too are married to too many positions at this point.
While you're talking, I was pulling up some of the activity here on good old Love Southwest, and it looks like the bulk of it was they did about nearly 20,000 contracts today, which is substantially higher than their ADV, and it looks like the bulk of it, nearly 7,000 was in these garbage, 12 puts, so, a dime, 15-cent puts being slung back and forth for nearly 8,000 of those contracts. So, yeah, it wasn't too much in the way of hefty size. You saw there might be some spreads rolling out to May and a little bit of activity on the June 11 puts, about 2,200 contracts there, but the rest was, pretty much back and forth in these, in some little garbage front month, hoping, I suppose, to pick off some little bit of a pop on this downside or a pop going back up that this news wasn't that big of a deal. Of course, April is not going to have an earnings pop in it. Earnings is after April expiration. So, yeah, a lot of garbage activity in Southwest.
It was interesting, yeah. A lot of people were buying puts. That's what caused the vol to go up, at least this morning. That's what it seems like.
Most of the activity, most of the 7,000 contracts was buys from what I could see here.
It's really, I don't get it. It sounds like your standard, what we would call kind of dumb paper, kind of reactionary, already long the stock, let's overpay for protection paper. That's kind of what I kind of interpreted.
Maybe, or you could also have the flood of retail coming in, and they saw the headlines over the weekend. They fired up their Extend platform, whatever they use, their platform of choice, and said, hey, these puts are cheap. I'll take a flyer that on Monday.
Without talking to Rob Kurzakowski first. He totally would have pointed and said, hey, maybe you hold off here, pal.
Well, it's amazing how when we really saw the stock hit its lows intraday, we were down. It was only down about 50 cents intraday. We immediately saw the stock pop. We started seeing some traders taking advantage of that volatility and selling puts and selling put spreads a little bit further out, hoping to capture some of that. There wasn't really just talking to customers. There didn't seem to be any really bearish tone. I mean, I'm sure we had some orders that were already queued up from over the weekend that assumed that the stock is going to drop $2 on the open. But yeah, I mean, the company was very proactive about it, and as soon as they recognized that there may be a problem, they acted really quick.
Well, Rob, that was some interesting insight as usual. What I expect from you boys over at Options Express, and definitely reassurance when I get on that plane on Thursday. My wife's freaking out about the hole that was in the plane last week on Southwest. I'll be sure to tell her Rob says their planes are safe and that their average age of their fleet isn't actually less than other airlines, and that should hopefully calm her fears a little bit. And with that, we're going to close out the old Express block and roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is the section of the show where Uncle Mike regales us from the mountains with some pearl of options wisdom. And today he is joining us via remote, hence his remote-sounding tone on the show. But, he's joining us via remote. So, Uncle Mike, take it away.
Okay, let's dive right in, as Mark Longo would say. Today, the man from the mountains, Mike Tusaw himself, that is me, is going to tell you the top 5 ways with which your financial advisor may or may not understand options. These are some questions to ask, and these are some ways with which to kind of go about doing it to see if he's actually of knowledge in the option world. Now, by getting the right answers to these questions does not mean that he actually understands them. It just means that he has a basic understanding of these questions with which it's worth a second look. So, some of the initial things with which to look for if you're looking for a financial advisor that does things in the option world. The first thing to bring up, ask him, what do you think about selling a cash-secured put? And see what his answer is. And whether he likes it or not, that's just his own personal philosophy. But then immediately say, well, what about the covered call? And if his answer is, oh, I think the covered call is much less risky than such a thing, that is clue one to run and not walk to the nearest exit, because this gentleman does not, or lady, does not understand options. The next thing to look into, credit spreads versus debit spreads. If you hear an advisor, or an educator for that matter, tell you something along the lines of, I like a credit spread because of the fact that I get income from it, that's fine. However, let's say that it's an out-of-the-money credit spread. You can do a debit spread and essentially achieve the exact same risk-reward. So, for example, let's say that XYZ stock is at 55. The advisor recommends the 50-45 bull-put spread. And you could say to him something along the lines of, well, why not the 45-50 bull-call spread? And if his answer is, well, I think that I can get a better fill on the 50-45, or maybe the SKU's doing this, or the commission works out better in your favor if we do the credit spread, okay, that's fine. But if his answer is something along the lines of, oh, you don't want to do a debit spread, you have to pay for it. You can get a credit, you actually get paid to do the credit spread, that's another cue with which you need to get out of Dodge very quickly, because he does not understand the option product. Third thing to look for, experience, street credibility. What has this advisor done before he actually worked with clients? Was he a trader on the floor? How was he educated? Was he self-taught? That's fine, but how did he actually learn about it? Fourth way, what are some of your current trades? Does this advisor practice what he preaches? That's something with which you need to ask. Now, if he doesn't practice what he preaches, and let's say he stays in cash the whole time, he better have a good reason for it. If his reason is, you know what, I don't feel comfortable working with my own money, my philosophy is that I think more clearly when working with someone else's money, that's fine. Or if he says, oh, I just don't have time to trade, that's probably not the right answer. Typically, you want to work with someone who practices what they preach, or have a very good reason why they don't. Finally, ask him about his losses. If he dodges the question or says something along the lines of, well, we really don't have that many losses because we have a very high probability trading system. We've back-tested it, we've done this, that, or the other, and we typically make money all the time. If your answer is something along those lines, that's another cue to get out of Dodge. However, if the advisor says something along the lines of, what his worst losses were, what he learned from them, and what happens when he loses on a trade, then that's something with which you can take with a little bit of credibility. From my experience in this business, I've learned that the best traders have losses. And if anything, it's kind of ironic, the people that I tend to trust are the ones that brag about their losses a lot more than their wins. Just because of the fact that, to me, someone who can come back from a horrible loss and still be in the business, that tells me that they were doing something right and that they were allocating the money properly, or they were limiting risk on the loss, or something is being done right if they can come back from losses. If all they've ever had is wins, when something comes around that's bad, then that's not the kind of person that I want to be working with. I had an old football coach that told me once, when you're baptized in fire, you don't melt in the sun. I'd want to work with an advisor who's been baptized by fire. And that is the strategy block for today from the man in the mountains himself, Mike Tusaw.
And that's going to do it for the strategy block. And with that, we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we talk about what's coming up in terms of what we're looking at and what we're watching, what we expect for the next few trading sessions. And as we alluded to earlier in the show, the big man, Mr. B, is running off at the mouth again, this time after the market close, in a few hours, I believe. And so that is, by the time you hear this, his comments will have been parsed quite a bit in all the morning newsletters and on all the websites and on all the radio shows and all the other outlets out there. But right now he is still imminent, so that put a damper on a lot of the activity today, and that's going to, obviously, what he says regarding future plans for QE2 and other attempts to inject some liquidity and some money into this economy, what he says about those, and, of course, housing and jobless claims and everything else will, of course, be parsed very, very, very heavily tomorrow. Aside from that, we do have Fed minutes tomorrow. I'm not sure if Bernanke, he probably will eclipse that, I would imagine. Whatever he says tonight will probably overshadow whatever is going to come out from that report tomorrow. So that report not as important as it may have been. Of course, jobless claims on Thursday. What else are you watching in the next few sessions, Mr. K?
Well, I think, the minutes actually may have a little bit more insight. I think the way that the interview with Bernanke is actually, or the scheduled speech is not going to be necessarily, monetary policy. I think that I think he's too wise to really start kind of spilling the beans on on possibly QE3. The Fed minutes are always interesting because you can actually see what the Fed is focused on at any given point in time. Sometimes it's housing, sometimes it's job creation, sometimes it's it's a basket of things, and it seems like the retail spending has gotten a little bit better of late, although some of the consumer confidence numbers haven't been as good as we had hoped. So I think that the focus is probably going to be on jobs, and it's going to be primarily jobs and housing related. It seems like the Fed is not really concerned about, is actually wanting to stimulate inflation, which I don't know if that's necessarily a good thing, because inflation's kind of like that runaway freight train that once it really gets going, it gets going. And
Greenspan is rolling over in his grave, if indeed he did have one right now.
Yeah, and so
Greenspan's half the cause of this problem. You know, he's probably one of the more guilty parties of the last 25 years.
Oh, no doubt, but he also, staked his name as Mr. Inflation Honk. At least he started out that way. So talk of spurring inflation by the Fed has got to be anathema to him.
Well, you'd think this talk of cutting $4 trillion over the next 10 years might actually help the U.S. dollar. I'll be real interested to see if that is something they can go through. But, I think politics is a bunch of baloney. But the dollar will actually, if they actually go in and decide to actually cut something, the dollar could get a little bit of a rebound, which in actuality, part of the problem with oil right now is the fact the dollar keeps getting smoked. It's a major problem. It's actually a good reason why an oil play, if I was into oil, might be like Petrobras as opposed to one of the domestic oil plays. I'd be real interested to, I'm real interested in watching this inflationary game because, rates are going to go up, but if they can actually cut spending, it may not matter. I just don't know. So, it's just, yeah.
I'm looking here while we're talking here at these SPX weeklies here to seeing what they priced in for if there's any sort of Bernanke pop they might have priced into here today. And it doesn't look like there's that much in there. I mean, it's about the at-the-money straddle on the weekly with 4 days left to go is about $16. So it's maybe a little hefty, but nothing. They're not expecting some sort of Bernanke doom and gloom tonight or anything like that would price in some a little more severe movement.
I would guess that his speech is very, very carefully crafted and very hedged, even by Fed standards. The Fed is notorious for hedging themselves anytime they speak, but probably even more so because of the forum is usually they're talking during the day when most people are working. This time he gets to speak in the evening when everybody gets to tune in, so he needs to be a little bit more careful. But going back to what Mark was talking about with the dollar, it seems like the only time that the dollar ever pops is when another currency gets overbought and you get some forex traders reversing, or you get the panic buying where the sky is falling and we don't know what else to do, so we're going to buy dollars. But nothing in our own policy. The European Central Bank always seems to be a step ahead of us as far as raising rates and being they're a bit more hawkish. Of course, inflation's a much bigger concern there because overall they pay on average more for their goods and services than we do. I think that the Fed's just going to be a little bit too late. They're going to create the monster and not be able to stop them. Once they're basically going to be Dr. Frankenstein with inflation.
And I'm looking through my calendar here, but I'm not really seeing anything in the way of earnings that's going to let up the tape too much this week. Any names you guys watching on the earnings front? Besides Slinky, Sebastian, and whatever is being constructed in the background there?
No, I'm really, yeah. No, there's not a lot of good earnings stocks going on this week. The only thing I'm watching is I noticed that, and it kind of gave it away this in the afternoon, but keep an eye on those time spreads. April got way oversold this morning before kind of popping back. And some of those time spreads have been really getting out of whack and have produced some real opportunity in a very, very short period of time. The only other kind of interesting play I'm looking at is Toyota Motors. That vol is still really, really high, and I think that April 75, 80, 85 butterfly or the may be an interesting sale right now. So iron butterfly might be an interesting sale. So those are the two things I'm kind of keeping an eye on. So.
And for our listeners, you're talking April got crushed in the SPX, I'm assuming, and the SPY. Yeah.
If I'm not talking about, if I don't give a name, I mean S&P 500. That's really all. That is the name in options, right? I mean, it goes S&P 500 then everything else.
SIBO certainly would like it to be that way. I'm not sure if some of the others would agree, but yeah, definitely certain entities would like it to go that way.
Well, no, you got, and I mean, the same holds true in the ES options, and that'll even get it through into EEM and some of the other smaller names that when you see, they all move in lockstep. So April got kind of oversold in any of the major stocks across the board this morning. Oversold. It was clear as day.
Looking at Toyota while we're talking here, not much going on in Toyota today.
But the vol's still really elevated.
Slight volume, and nothing interesting on any sort of on a strike or analysis basis. You're saying the May iron condors, are you looking at 70, 75, 80?
Yeah, April and May both look like a sale to me.
We'll have to price those up and look at them. And that's going to do it for this episode of the Option Block. I want to thank all of my partners in crime for joining me on this episode. And starting off with you, Mr. Greasy Meatball, what is coming up at good old OptionPit.com?
Well, we're having our anniversary sale. As you know, it's our first anniversary. We just had it last Friday.
What is the first anniversary? So I get you what is it? Aluminum foil? What is that anniversary?
I think it's paper. Yeah. Paper.
Okay,
which would be great. So
a paper bag I sent you wasn't inappropriate then. Okay.
So you can give me some money.
There we go.
So right now, if you sign up for our Future Professionals course, I'll give you our special volatility seminar free. That was a 4-part class that we sell for $250. It's probably our most popular out-of-the-box course, and people really seem to like it. So that's kind of our special deal we've got going, and something that if you really want to learn options, the combo of that Future Pros course and that volatility seminar, by the time I'm done with you and by the time you watch that, you will know options in and out. So
you should throw a Slinky in to make that package complete, and then you'd have sign-ups in mass.
I'll buy you one of those triple whammo boomerangs.
Even better. And Mr. Kurzakowski, what is coming up over in Options Express land?
Well, next week we have one of our big live events. It's the Los Angeles workshop. that always gets a good turnout. Unfortunately, I won't be there.
Is that a WNBA team, the Los Angeles Workshop?
I think so.
No?
I haven't really ever watched the WNBA.
You're not into WNBA? I thought that was your big thing. I remember because I know before the show we asked you who you thought was going to win the finals, and you said, "What are you talking about? The women played yesterday." So that's what I recall.
And you had some size money on the game, if I do recall, as well.
Yes, that's right. That's right. So.
Well, I was planning on putting on a wig and heading out there myself, but
a la Ladybugs.
Yeah. It's a very underrated movie.
Our first and hopefully only Rodney Dangerfield reference of the show, though. We still have a few minutes left. We'll see what we can score.
We can pull in a back to school one. You know?
Back to School is quality. I will give you Back to School.
That's a great movie. That's a great movie.
If you take issue with Back to School, I'll have to take issue with you.
Jonathan, God rest Jonathan Brandis' soul.
There's Easy Money too. I can never get tired of watching Easy Money.
No kidding.
I'm not okay. I'm sorry. We've derailed you. Go ahead, Rob.
Sorry, Rob.
But yeah, we have that's one of our bigger workshops is the LA workshop. Unfortunately, I'm not going to be there. They don't ever let me loose in public. So, but I'm sure that Joe Cusick and some of the other education or some of the other guys from our education department will be there and walk you through the website and maybe give our customers a sneak peek of some of the new things that we have rolling out, the all-in-one trade ticket, which is already live, and some of the new features that we have that are actually going to be integrated into the all-in-one trade ticket. So that's coming up next week. That's our one really big event. Other than that, we have our complimentary coaching webinars, and I finally have a date for the inaugural Espresso webinar, which should be later this month on the 21st.
Oh, you guys are doing your own webinar?
Yep.
It's going to be you or Mike or both?
It's actually going to be both of us. I don't know how we're going to work that up. Obviously doing a webinar with more than a few people, I think it's going to have to be a little bit more scripted than usual. One person sitting there, sometimes you can kind of just make loose notes and just kind of run with it, where we don't want to be talking over each other. So we still have to figure out what the frequency of that will be, and but I know we are going to be covering 6 to 8 futures markets and kind of breaking things down both fundamentally and technically.
I will say this: I was at a party this weekend, and some of the people there were actually options traders, and they came up to me and were talking about the website. And one of them specifically mentioned, he said, "I really like your futures guy on your site." I said, "The Espresso guys?" And he said, "Yeah." So you have at least one fan out there, Rob, you and Mike. So people are liking what you guys are writing up in the Espresso.
Well, it's always nice to hear, and we do get some good feedback. From customers that we do have a pretty good click rate or click-through rate on our emails, meaning that people are actually opening up and reading them, not just immediately filing them into the old trash can.
Yeah, just judging by what we see on the site, whenever we run your stuff, which is daily these days, it does have a decent response rate. And, of course, if Uncle Mike were here, I'm sure he'd want to plug KnowYourOptionsInc.com, where they have all sorts of webinars and fun 18-minute portfolio reviews available for you to go and check out. And finally, if you want to catch up on any of the unusual activity we discussed on this show or many of the other activity today that we just didn't have a chance to get to, or the Breaking Options News or any of our other radio programs or all of that fun stuff, just head on over to theoptionsinsider.com and check it out for yourself. If you're into options at all, I'm sure you'll find something there that will catch your eye. Just ignore that guy up there, last name begins with S, who writes a lot of stuff on our site. His stuff's a little weird, but once you get past his stuff, there's other stuff there that's really very good.
Oh.
And with that, we're going to close out this episode of the Option Block. I want to thank all of our listeners for downloading and streaming and subscribing to this show, and we will see you later on this week.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.